Hi traders, hello there, welcome to the live webinar with Admiral Markets. My name is Chris and today's focus is going to be on fibs and Wiz patterns. Wiz is a tool developed by myself that is also based on Fibonacci levels, sequence levels, whereas of course the Fibonacci indicator is based on ratios. So basically all in all we'll be focusing on fibs within the larger topic of trading chart space within market structure. And just in case you're wondering what that is, market structure is based on triangle of three things: trend momentum, support and resistance, and price patterns. All right. So, and within that market structure, we are trying to find a space on the chart where we have the highest probability of price making, let's say, one fluid movement, or at least relatively quickly into one direction to hit the next target or support or resistance level. So fibs, that's our focus for today. But before we take a look at the charts, be aware that Christmas is coming a little bit earlier than usual. So check out admiralmarkets.com for this particular special offer regarding the spread rebate on 15 instruments. And second of all, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you, if this webinar is suitable for you. All right. So let's take a look at the charts. Here we go. All right. So yesterday we were talking about the euro dollar and the fact, will it bounce or break in this zone? Actually, price was about here, I believe. Let's see, 1, 2, 3, 4, 5. Yeah, around here. And I was saying that it really depends on the candlestick patterns, remember? And I said that we'll take a look tomorrow and make a judgment if there was a false break, a good break, or a reversal. So anyone in here probably remembers that because this was the first thing we were discussing and analyzing for a lengthy time, and we were, I was indicating that this R1 resistance area is an interesting bounce or break spot. So what did we get? What was the answer? Breakout. We got a breakout. Price is moving up pretty strongly at this moment. Was there any particular candle that stood out in that breakout? Not really. So anyone who skipped this breakout to the upside, I think, didn't do anything wrong, or not that you can necessarily do anything wrong, but I think that it's logical, let me say this way, that any breakout to the upside was skipped, because look at these candles. These are all, this one is not really a great breakout candle. These are small candles. Here we have a wick on top of that. So that's not an easy, that is not a particular candlestick pattern that makes me go like, oh, that's a great breakout. So anyone who took the trade, despite that, great job, congrats. But I don't think that was an easy call to make for upside. Anyone who skipped that, I think that makes, is logical, because there was really no clear signal here. Price went sideways. Now on the hourly chart, the fact that price did go sideways could be seen as, in a way, as price respecting the R1 as support now. So that's something that, is maybe some traders took a bounce at the R1 here for that follow through. As I said, if you did up 50 pips, great job. If you waited for a breakout candle on the hourly chart, then half an hour ago we had it right here. This was a good breakout candle with the close near the high and the close all above these wicks, and the stop loss below the R1 here for about 28 pips stop loss, and the trade is up now about 30, and I would say that the stop loss can be moved to break even at this point, and the main target is 119. I like to go just below 119, 118.98. Second target could be 119.15-ish or 119.20. And the R2 is the target. Very simple. All right, so that's the breakout trade we discussed last week. So, yesterday. So 4 hour, not a clear signal, but we did get candles that were above R1, and we certainly didn't get any reversal signals. Remember, I was looking for a big wick, some kind of pin bar. It never occurred, or two bearish candles. That never occurred, or bearish engulfing twins. Well, maybe this was bearish engulfing twins, but look at the wick at the bottom. This was an ultra small candle. That doesn't count. So you got to have at least a strong bullish engulfing twins. This is one where two small candles in a row with a wick at the bottom. That's not what you're looking for. All right, so tricky to trade on the 4 hour chart. Depth to the upside, definitely not to the downside. Anyone who was maybe monitoring on the 1 hour chart was lucky enough maybe to trade the bounce at the R1 or the breakout. All right. Now at this moment, price is flying up, and it's not a good spot in my view to trade it now. It's really big momentum, but the problem is that the target is around the corner from my point of view. Now I'm not sure if price is going to stop. It might just blast through that target, but it's not something that I'm counting on. If the entry is down here, and the target is R2, and the stop loss should be below a support level, which is all the way down here. That's a reward to risk ratio that doesn't make sense in my book. And I think, I'm not saying that this could be a winning trade, but one loss and it wipes away 4 losses, 4 wins, sorry. This is not a type of trading that I like to do. So this is off limits for me. The trade, if there was any trade in this breakout, it was on the hourly chart from this zone here as it broke out. That's the only thing I can see. Now on the daily chart, we did have a good bullish daily candle, which is, I'm not sure if we discussed that, but that could have been a way to enter too. Just on the daily candle with a stop loss below the daily candle low and targeting the R2. So on the hourly chart and daily chart, there were good candlestick confirmations patterns, not so much on the 4 hour chart. Now, whether this upside is a full uptrend or is it going to hit R2 and R3 and still move down, that's an open question. When we put this trend line on, you can see it's approaching bigger resistance. My bias is that price will bounce at the R2 and move down. But I'm going to follow price. If price closes again with another bullish daily candle, yes, then we might be in a situation that price is going to break out to the upside. So, from this point of view, it's again a new decision zone, bounce or break, and this is something that price is going to tell us what to expect. I think that this is a very important resistance level and that price will stop there, which is one of the reasons why I don't think there's any space to the upside at this moment, which is one of the reasons why I think that trading it right now does not make sense, because a few pips higher, we have that important zone, and I expect price to turn back down from that zone. If it will, I don't know, but it's not worth trading to the upside right here. It was upon the break of the R1, as we discussed yesterday. Now, sometimes analysis is one thing, catching a trade is a second. So, but the good thing is that our analysis was correct. Whether you managed to catch that trade or not depends in part on the time frames you looked at, and of course, if you were analyzing it this morning, etc. Now, let's see. If price does break above the R2 and R3 zone, yes, then there could be a bullish breakout to the upside. That could be big on the euro dollar. And that could be also very interesting. So the R2/R3 resistance zone is, from this point of view, much more interesting than the R1. The break of the R1 only offered a small space. Between R1 and R2, it's about 80 pips. All right, but above R2, we have targets that are way further. If we put a fib from here to here, you can see price bounced at the 5061.8 fib zone we were talking about in previous videos. We already said that this is 5 waves up. Sorry, you don't see it here, but on lower time frames, there could be a 5 wave. This is ABC down to support at the 5061.8 fib, which could be a bouncing spot. Right? So all of that played out. Now is the question, then we had the break of the R1, break of the pivot point. Now the question is, will price respond to the R2, move down lower? The space to the downside is from the R2 to the S2 potentially. But if it breaks above the R2 and R3, then there's space to the minus 272 target and the minus 61.8 target, and even beyond that. So good space to the upside here, and even further. So this particular zone, even more interesting than the R1 from a space point of view. So this is how you can use fibs for understanding space, right? When price is falling here, we know that the space is limited probably to the fib support, right, that we mentioned here, 5061.8 zone. So there's some space to the downside, but limited. In other cases, when price is with the trend, bouncing at the 5061.8 fib, we know that this area is a support and could potentially go to the fib targets. The most space is actually to the upside. So this is how you can use fibs to our advantage. If we know that price is breaking, right? Oh, price is breaking, but has already arrived very close to the minus 61.8 fib. Then we know there's not much space before it's hitting a crucial target. Makes it less interesting. Yes, indeed. Exactly. Ronald is saying that we still have lower highs, right? Which is why we have this trend line. Totally agree. Which is why, indeed, I'm also, with my bias, leaning towards a bearish bounce and reversal at this or close to this spot at the R2 and trend line. But you never know, and we have to be flexible and on guard that sometimes price invalidates our analysis and goes in a direction that we don't expect. So at least, but we know when that happens, right? If we get a break above the R2, then it most likely is breaking to the upside. Now there could always be a false break, and then if we have a big daily candle with a wick at the top, that could be a false break. But generally speaking, R2 important, and if it breaks through R2, then good chance that we have a bullish breakout. Once we see a breakout like this, we can always use the Wiz tool, which is a script I developed, or the idea is mine, but someone else developed it for me, the actual codes of the script. I'm not a programmer, but it is nothing that fancy. It is based on Fibonacci sequence levels, but this script does that automatically. It automatically plots those Wiz levels, and basically on the hourly chart, it doesn't post or show all sequence levels. That if you do that, you would have too many lines, especially between 0 and 55. You would have 1, 2, 3, 5, 8. It would be too crowded. This is 55 right here. This is 89. This is 144. And typically the third Wiz level is still a correction often. Only when price breaks above the third level do we see a stronger kind of momentum push. And price is at this moment approaching that third level, which is by coincidence at the same R2 spot we just mentioned. All right, let's see. Let's move on. Alrighty, I think yesterday we were looking at this candle, if I remember correctly, or this one, and saying that, it's probably in a bullish bounce zone. And we did. We got a good pin bar, I think, just after our webinar, right here, this pin bar, bullish pin bar on the 1 hour chart, which indeed kickstarted a rally to the upside. And not a gigantic one, but still 50, 60 pips to the upside. Overall, price is still fighting against that resistance, and despite the bounce, it hasn't gone too far to the upside either. So for the moment, I think the only thing that I would be interested in with the pound is if it is showing a strong bullish candle above this zone, and that zone, I'll tell you, is around 134.25, 134.30. So a good 4 hour candle breakout above that zone, we could see the breakout to the upside towards R2. Until that moment, this is still heavy resistance, and I would, not be inclined to trade into it from a lower spot like here, or maybe even here this morning. As price was breaking above this resistance line, small break, small pullback, a continuation. It's all very small movements. So, but anyone brave enough to trade it right here would be up a few pips. That's not an easy trade, but hypothetically, theoretically, maybe someone took that. In any case, I think the bigger breakout is still happening right above the R1 here, right? Waiting for that breakout. Or a bounce. It could be a bounce too. So again, a zone where in this case, both a bearish bounce and a bullish breakout could offer interesting potential trades. The bullish breakout definitely to the, well, not definitely, but at least, pretty likely to the R2, and a bearish bounce, I think a good chance to go back down to the weekly pivot point. All right, if you took the bounce in here, around here, taking some profit up in here makes sense. To lock in some profit, and moving the rest to break even would be good, because even if price does make a dip, pivot point could be a bouncing spot. The advantage of doing that is you lock in some profit and let the potential rest of the trade go to a higher target, but not without risking anything, because the trade is at break even. So that's always a good combination. All right, let's see. Moving on, dollar yen is still continuing higher. I was very skeptical about the space to the upside on the dollar yen, partly because of this fib. And I thought the 61.8 or the 78.6 fib will be turning spots for the dollar yen. And well, price is right here in this zone. It hasn't hit the 78.6 fib as yet, but it's very close to it. So we're going to find out soon if there are going to be bearish candlestick patterns that make sense to trade on this currency pair. That's what I'm waiting for. I haven't changed my analysis. It's still the same. The only thing what I'm waiting for are bearish candlestick patterns to confirm the turnaround on the dollar yen for more downside. AUD is making a triangle, looks like a triangle, A, B, C, D. This could be E. That could be pretty interesting if this is an E for more upside. So a wave E should not go below the wave D. Sorry, the wave E should not go below the wave C. Sorry. So let's zoom in. So if this is A, this is B. No, wait, let's check it out. This is A, this is B, this is C. Yes, okay. So if this is C, this is D, and this is E, the E should not go below this bottom right here. So any bullish candlestick pattern on a 1-hour chart in this zone that doesn't break below this bottom could be a potential long setup in my view. I mean, it's a risky one, but it does look like a triangle. Stop loss could be below this bottom. And up we can go to the minus 272 target at 77.50. So that is about 80, 90 pips. Stop loss maybe 20 or less. Now, will it move up? No one knows. It always, this pattern could break to the downside too, as I said before, and it could retrace to deeper fibs. If it does, and does break to the downside, it could fall to the 38 or 50 fib or 61.8 fib, which in turn could still be bouncing spots to the upside. That's always a risk in trading. No one will know if price is indeed going to bounce to the upside here or not. One thing that could help is whether they're going to be bullish candlestick patterns as it retests this bottom at 76.45. All right, if we don't see bullish candlestick patterns, it could just keep falling and cut through or fall through a support. If there are some candles, it will help a little bit with a potential bounce. Now, if you wait for a bounce, you might end up trading it higher than you want, maybe up in here, right? Price first falls, then moves up. That's the disadvantage of waiting for a confirmation. If you take it earlier, as maybe price gets down to here, let's say, and you take it as it falls, you have a tighter stop loss, but you're of course running the risk that price just keeps falling. So smaller stop loss, more risk, bigger stop loss, maybe less risk. Both are options to think about. In this case, I think they're probably about equal. I don't have any particular favorite. I think they both have their own advantages. So it depends, a bit as well what type of trader you are, what you prefer, and if you first of all like this currency pair to trade or not. Obviously, maybe you don't like it that much. It is, it's a bit annoying with resistance so close by. Then again, it's still using these broken tops as support. So doesn't look too bad for one more push higher, in my view. All right. We can go, of course, as always, go through some of these currency pairs, but maybe there's a pair that you would like to take a look at, or an other instrument that you have on your mind. Is there something that is urgently you would like to take a look at? Stock index, commodity, CFD, currency pair. Let me know. In the meantime, S&P 500. Great. So let's take a look at that. Or maybe I can, quickly finish this pound yen as we're looking at the chart anyhow, and then I'll go to the S&P 500 after that. Very quickly, basically, breakout candle here. This is a good breakout candle. Why? And likely to break this trend line I have on the chart. Why? Because the candle close is near the high, no wick or hardly no wick. Good candle. The size of the candle, decent for the 4-hour chart. Why? Because compare that size to other candles. Look at all these small candles. Look at these small candles. Look at these small candles. This breakout candle is definitely not the smallest, or it's one of the smallest. It's not the biggest either, but it's in the top 25% probably, right? You can definitely see it's a bigger size candle than most of these candles. So that's a good breakout candle because of the volatility in the candle and the candle close near the high. So anyone who took that breakout, as discussed yesterday, is doing well. So that's a good breakout trade. Now at this moment, I don't think it's that good to trade to the upside, because in my view, it's going up to resistance at this point. So anyone who took that trade there made sense. Why? Because there is space to next resistance levels like this purple line or purple zone. Right? Price was still in an uptrend. So as price was retracing lower, there was the potential it would bounce its support. And because it retraced lower, there was space again to the upside. And as you can see, it gladly moved up into that space. This particular pair swiftly moved up as it broke above resistance so far. But does that mean that it will continue forever? Not in my view. There's still some space left, but this purple zone is definitely something to be aware of, and that could be a reversal territory. So there's still some space left, and maybe on 50-minute charts there could be a continuation trade available. Maybe if there's some kind of bull flag. At this moment, we don't really see a good bull flag. Here there was a small flag. I wouldn't even consider this a bull flag, to be honest. This was a small flag indeed, and here was like a sideways zone. Maybe here. So maybe on a 50-minute chart had some patterns there. As price was breaking to the upside, at this moment would probably need to see a mini 1-hour flag, and it could make sense to trade it up to that zone. But ultimately, this is a resistance zone to be aware of. It's also because when you look at the euro yen, it is right smack at a resistance zone. Excuse me. Now it looks like it's trying to push. It actually is pushing through as we speak. And yesterday I was saying that this to me is more of a resistance zone and a bounce spot than a breakout spot. But we're going to find out soon. I think the daily candles probably has the most value. So if this is a failure to break, this candle, today's candle, needs to have some wick, a decent wick, a wick that probably falls all the way down to close to the candle open. Now, is that going to happen? I don't know. Maybe not, because there's a lot of volatility in the upside. But all in all, I will wait for today's daily candle personally, and just sit on the sidelines till that info is clear and available. And that is only available when this daily candle closes. And then I will evaluate it and see if I think there's any trade that is interesting based on this daily candle in connection to the resistance zone at this top. All right, so equity is down as Dax is falling, at least Dax, S&P 500 indeed too. It's been declining for the last 2 hours. A lot of volatility in the current candle at least, and it seems like price is going to fall to retest support zones down in here for the moment. And struggling with that upside trend that we've had already for years now, at least for the moment. Let's take a look at Dow Jones. Is it doing the same? Yes, more or less. Yes, not as much as the S&P 500 though. Nasdaq falling a little bit more, isn't it? Even more, and probably the biggest downside move is on the DAX. That's not so surprising, maybe in a way, because the DAX failed to make a higher high. The other indexes or indices did make a higher high, DAX didn't. And looks like this could be a lower high. So what will a lower high mean for the DAX at least? For the DAX, there's 1, 2, 3, 4, 5, 6. This is the 6th candle that isn't able to break for a higher high. And my rule of thumb was 6 weekly candles that don't make a higher high could indicate a bigger correction. So S&P 500, Nasdaq, Dow Jones don't have that. They had a continuous higher high and uptrend. The DAX is the first one that has this of those 4, and the only one actually so far, right? If this particular week's weekly candle fails to break for a higher high. That looks likely at this moment, but you never know. And if it closes anything like this at the end of this week, then that could be what I would consider a chance of a retracement and maybe reversal. I'm scared to say it, but let's stick to retracement for the moment. And yeah, it could be a channel. Could be building maybe a little bit of a rising wedge, depending on how you draw these trend lines. So yeah, how much correction could there be? Well, maybe not that much, but gotta be a bit, not too optimistic about the downside downside um, space. For the moment, that seems limited with all these tops and bottoms close by. But step by step, it might make that fall. We just don't know how far necessarily these purple lines could be bouncing spots. All right, but yeah, interesting development at this moment. Of course, we've seen these before. We've seen retracements along the way, here, all the time continuation. This might be again the case. So let's see how price responds to these support levels. Flavius is referring to a different index. Let's open that. Let's see, where is that? I gotta look where. Yeah, of course, wait, this one. Here we go. Nikkei. Yeah, also sixth week, not breaking for a high. Big pin bar on this stock index. Very similar indeed. We had great bull runs on these indices for years now. In some regard, depending on how you count it, this bull run has lasted since the Great Recession. Maybe not on the Nikkei necessarily. It started a bit later, 2012, but on S&P 500, you will definitely see that. Here we go. See here, when it bottomed out March 2009, it's been moving up ever since. There have been retracements, of course, summer 2010, summer 2011, most recently 2015, which lasted pretty much for a year. Elections in 2016 here, smaller one. But other than that, it's been upside. Of course, here also some smaller retracements. I'm not even counting those. The big ones, summer 2010, summer 2011, where there was fear for double dip recession at the time, because of course, it was not very clear that there would be whether it would be upside. It could have been there was a recession in 2008, 2009, Great Recession. There was fear for at that time another recession. So the markets did twice make a dip here in those summers. But after that, it's been moving up very, very steadily. So are we going to see in 2018 some kind of retracement of that upside, a bigger retracement, not just a move down to the 38.2 fib like this, right? 38.2 fib, 38.2 fib, 23.6 fib, but more, maybe beyond the 38 this time, finally. That's the question. If it does start to reverse, you can see that's always a big if with reversals against with the stock indexes, stock market. But if there is some retracement, the 38.2 fib, even those fibs are pretty far from current level because price has moved away so much. But once again, very difficult to find a timing when corrections like this start. One thing could happen is that, as I said, 6 weeks don't break, which means downside, upside failure, and then there could be the third correction like this. This is what we might be seeing on Dax. Let me show you. Might. Here we go. Right? Downside, upside failure, and will we get that third leg now? All right. Any currency pairs you have on your mind? We talked about pound yen, euro yen. Aussie yen? Let's take a look at that. I was bullish. Bearish. Excuse me. And expected actually price to look like a bit like a rising wedge to me. Expected price to break, or was waiting for price to break below, and also slightly expected price to break below the support line. That never happened, and it continued with the upside. So my trade didn't get triggered. I still think that, generally speaking, it's running into a resistance zone. So, it doesn't look that great of an area for longs, in my view. If it does break through that zone, then it might be changing kind of the character of this chart. For the moment, probably still leaning towards, there's divergence between these tops, still leaning towards reversal territory. But it's not something very interesting to trade. I think it's a tricky spot to trade. It's in a resistance zone, but bullish price action, so they're kind of contradictory to each other. I am leaning towards waiting for price to either break or show weakness to the downside. Bearish, bullish weakness, and hence bearish potential for downside. If we put the fib on the very first move up, you can see that it broke above the minus 270 target. Next target could be the minus 61.8 target. So I probably like let's see, if the dollar yen is going to move down, odd USD would probably look a little bit better to me than odd yen. Dollar yen is moving up at this moment, but I consider at this moment still likely that prices are going to bounce at resistance. That is not that clear as yet, right? It might not do that, but that's my analysis. So my bias. So if dollar yen does bounce at my 78.6 fib to the downside, then it could drag odd yen too, or it could happen after it hits the minus 61.8 fib and move down. So odd USD upside looks a little bit better to me than odd yen in my view. But if the dollar yen does break through that fib and that resistance zone, the odd yen could move up higher than I expect. So I realize that it might make this upside. It's just one of those trades that I would feel comfortable with skipping because of my analysis, but I know that it might work out. Don't get me wrong, I was trading the odd yen to the upside, but earlier, somewhere here, right here, for this upside here. Alrighty, so yeah, CAD is moving higher. Euro CAD, pound CAD, dollar CAD, not as much, but I wasn't a big fan of those currency pairs anyhow. And other than that, maybe we can take a quick look at Euro odd again to the upside. Had a little bit of a bull flag on the 15-minute chart. A couple of hours ago, had to break to the upside on the Euro odd. Euro New Zealand didn't retrace into my purple zone here. Just continued higher immediately. I was looking right here for a little bit of retracement. It didn't even give me this small retracement. That was only 30, 40 pips, which is really not much for Euro New Zealand. So anyone who was waiting for retracement like me missed it. Anyone who took this breakout candle could have maybe stayed in that ride to the upside. Those aren't moving too much. Let's take a look at New Zealand yen. Yes, New Zealand yen. Alrighty. Broke below the trend line. But the break didn't break below the weekly pivot point. Anyone who took it probably would have been a loss, to be honest. But in this case, difficult to exit if price immediately reverses up. So that doesn't seem likely. Now with the weekly pivot point so close by, it would have been probably better to skip this particular breakout and probably think that I'm not sure what I said yesterday. It seems like I was looking for a break of this trend line, but I think that when I used my other template, it didn't have a breakout. I was looking for specifically for a break of this. Here we go. Of this fractal. Let's see. This fractal, maybe, yeah. I mean, it's a doubt. It's one of those that could be yes, could be no. At the time when you're looking at it live, now it's not so good for downside because prices moved up above the 21 EMA. Here, maybe it depends how aggressive a trader is. I guess more aggressive ones could have taken that one. Traders who are a little bit more cautious probably were waiting for a little bit more clarity with regard to how price is responding, generally speaking, to this support zone, I would say, as the breakout was not very, very clear from my point of view. So it's one of those coin flips. At this moment, price is moving up, and I think it looks better for downside. Personally, I'm not a big reversal trader. We have a fractal here at the long-term moving average. Now, price is moving higher, so that's always a bit risky. And above that, price has tested 21 EMA twice, but I'm still leaning towards more of a downside situation. So I think that personally, this is looking more like a reversal pattern. If price moves up, fails to break, hits this resistance and turns, it looks more like a reversal to me. It could break this top by a little bit and still hit resistance here. And that could be a false break too. That breakout would create divergence between these tops, by the way. So this entire zone looking more bearish to me than bullish. Alrighty, folks, that's it for the moment. More webinars you can check out at admiralmarkets.com. Just go to Education, Forex, and CFD webinars tomorrow. Neneth and I are going to take a look at measuring and trading breakouts and fakeouts. Next week, market will be partly closed due to the holidays. We will have, I think this was by accident. I don't think Neneth is going to have one on December 25. As far as I know, the market is closed at that moment. I'm not, I'll check when the market is going to reopen exactly. But then we'll have a webinar apparently on Wednesday, all right? And Thursday we have one together. I won't have any trading webinars next week or the week after that. So I'll be back with these webinars 3 weeks from now. And the market is gaining some speed, hopefully again. I think it will after 3 weeks from now. Typically, market a tad slower next week. The week after it gets a little bit better, and even better the week after that again. I'll be back 3 weeks from now, but then we'll take a look. If there is anything, then it will find it. So check out his webinars in the next 2 weeks too. And I got January webinars already available though, somewhere. Here we are. Here we go, right here. You can click on that and already register if you want for those January webinars for myself and of course Neneth. Feel free to sign up for January webinars. I'll be back though next week with one webinar with Neneth. We'll take a look at Thursday, tomorrow, and next week Thursday at educational topics. All right. Also, for more info with regard to the special, Christmas special, take a look at admiralmarkets.com. Also for MT MetaTrader Supreme Edition plugin from Admiral Markets with 60 extra features. Click on platforms, and I guess you notice for those that are regularly looking at these webinars, analytics, education, you'll find a lot of good tips and info there. And of course, check out how you can start trading with Admiral Markets through these buttons here. About us, start trading specifically, and also what you can trade. All right, folks, that's it for the moment. See you soon, and wish you all good trading. Cheers.